All right, all right, all right. I'm excited to come in here and play today. I've been excited about this class for a while, wanting to do this. We've been only doing our little day trading class once a week the last little while. And so I always look forward to coming in here and giving this a shot. All right, the first thing we want to do is we want to talk about the software that we're using. We want to welcome everybody here. Glad to have this nice little group of people who want to come and learn a little bit about day trading. So the first thing I want to do is just let you know what software I'm using. Here it is.
Okay, this is the software I use. It's called Track and Trade. They've got two versions, one for stocks, one for futures. This is the website, track, the letter N, trade.com. This is where you download a free 2-week trial. No credit card required. Okay, go download your copy, then come back here, follow along, and I'll show you all my settings.
All right, so that's what we're going to be doing. We're going to be using Track and Trade, and Track and Trade is a professional level retail, what I would call a professional level a retail trading platform. All right, so it's designed for people who want to do this kind of seriously. You're not just looking at a free little website out on the web where it's got a little chart on it, and then you're not going to sit there and try and click on your little iPhone to trade. This is for real traders who are serious about doing a little bit of day trading. All right, and so it's a trading platform. You have to download it and install it on your computer. It's not just a website. All right, so it's the next level for professional people who are retail traders. And we're going to get started. What I want to do is I want to talk to you today about OTO and OCO orders. I want to keep it very simple, just like we said out in our little marquee out front, right? I'll pull that up for you just to remind you real quick. Maybe my computer is so slow today. Oh my goodness. Oh my goodness. Are you kidding me? What the heck is going on? All right. So finally, oh my goodness, what is going on here? Is our internet that slow? Okay, here's the marquee that we have. So this is what we're going to try and just start off with. Kiss, Kippy, simple, scalpers, let's get trading. All right, so what we want to do is we want to trade. We're going to do a little scalping. Now, what's the difference between scalping and day trading? Day trading means that we're going to try and stay in the market 3-4 hours, 5-6 hours, all day long, right? We're going to try and capture a long-term move in the day trade time frame. You might get in once or twice during a day trade. A lot of people call what we're doing day trading, which is fine. But I think here in our classroom, we want to keep those separate. All right. Day trading is a longer term position that you're going to take and hold for the day. You're still going to get out by the end of the day, but you're going to do longer term trading. For what we're going to do today is scalping. All right. Scalping is short term trades. We're going to take little moves in the market, just some little trends, and we're going to try and capture those. Now, if you're trying to do that in the stock market, little small trends, they don't make you much money. So it's not worth it, really. You want to be more of a day trader in the stock market, unless you got a huge account. I mean, if you're trading 50, 60, 80, $100,000, $1 million account, yeah, sure, you can make some good money trading over there in the stock market. But most of us, we want to trade when we're doing our day trading. We want to, our investing account, yeah, maybe $1 million, maybe 500,000, but we don't want to be day trading with $500,000. I mean, yeah, you can, but most of us want to day trade with a smaller account. So, maybe, I don't know, even $5,000, maybe $2,000, 3, 4, $5,000. And if you got $5,000 and you go day trade in the stock market, yeah, you make a bit of money. It's not worth it. All right. It's not even worth your time. Go work at the gas station. You'll make more money. So we come over here to the futures market. And in the futures market, we have leverage. All right. And so we can use a small account with a small amount of money. We can make a larger investment or a larger amount of money with a smaller investment. And so that's what we want to do. And so that's called scalping. And scalping is catching just these little tiny moves. Now, if a market's not moving, can't make a market move. Some of you guys who've been here, this is how I make markets move. If I need the market move, I'll start, stabbing my my little doll here and make the market move. But I can't make the market move. But when the market is moving, like it is right now, it's making some decent little moves in here, we can do these little scalps. Now, I want to show you in the futures market. Now, remember, there's 2 exchanges. There's one in Chicago. There's one in New York. New York is the stock market. That's the one where you have to have a large amount of money to make a small investment. Small profit. Over here, we're in the futures market. We're out of Chicago. All right. So this is where we have a small investment and make a large amount of money. And so I'm going to show you. See this little move right here? Now, this little move wasn't very long. All right. Just a few minutes. At probably, I don't know, about 10 or 15 minutes. And you can see I'm going to draw a little dollar calculator from the green line here from entry to exit. That was $90. That was $90 in that one little tiny move right there. And if our goal is to make $500 a day, we only need to do that, with a couple of shares or a couple of, we don't call them shares here in the futures market. We call them contracts. All right. Oh, look, now it's making a perfect little ABC pattern, just like right out of the manual. And so there we have a nice little ABC pattern, you can see. And so what we're going to do is we're going to try and trade and capture those little tiny moves. That's called scalping. All right. Scalping. Now you say $90, Lan, that's not very much money. Yes. But if you come over here to the key, you can see that day margin on this account in that 10-minute time frame, all you had to do is put up $2,000 to make that $90. You didn't have to put up 25 grand. Okay. And there's no pattern day trading rules over here in the futures market. So you don't have to worry about that. No pattern day trading rules. How about that? Pretty slick, right? So we got $2,000 is all you have to trade one contract. If you want to trade two contracts, of course, you have to have four. So we call them contracts. We don't call them shares. And so a contract is the minimum move. It's the smallest increment that you can trade is one contract here in the futures market. And this is the NASDAQ. So we have in the futures market, most people are probably familiar with it, trading gold and silver, crude oil, corn, wheat, soybeans, those types of things in the commodities market. And that's true. You can trade all those things. But we can also trade the indexes, the stock indexes. So like the NASDAQ and the Dow and the Russell and the S&P 500. We can trade those too over here in the futures market in Chicago. So we're trading in Chicago. And it's like, okay, what do I have to trade in Chicago? Well, you just have to have a special piece of software. And that's what I mentioned to you earlier. If you just get track and trade for futures, it connects to the Chicago exchanges. If you get track and trade for stocks, it connects to the stock exchange. That's the difference. All right. So what we're going to do is we're going to come in here and we're going to start to trade on or scalp on the NASDAQ. Now, I've chosen the NASDAQ because it moves a little faster. It's a little bit bigger. It's a little bit bigger market. So when you're wrong and you lose a little bit more. All right. But when you're right, you make a lot more. So it's fun to trade the NASDAQ market. And what we want to do is we want to just kind of realize that the market moves through these little snaky patterns. Now, there's many of you have been involved in trading for a little bit, but there's reoccurring price patterns. There's, narrow sideways channels. There's head and shoulders formations. There's 1, 2, 3 top formations. There's Fibonacci, Elliott Wave, all that stuff. And you can learn all that stuff if you want to. But really, when it comes right down to it, what we're looking for is just these little ABC patterns like this. See how the market starts to move, and we usually miss that first run. Okay, that first run, we don't know the market's going to do that. It runs and then generally gives a little pullback like that, and then it runs again. Now, it doesn't always do it, but it happens often enough that it gives us an opportunity to get into the market. Now, that's a long position. If you take a short position, you can see it does the same thing here. So it goes down, it runs, it makes a little bit of a pullback, and then it runs again. So that's a little A, B, C, D pattern. Here's another one right here. A goes down, has a little pullback, and then it drops. So we generally catch the second run right there, that little piece right there. And that little piece right there can be $50, $60, $80, $90 with a $2,000 investment in just a short period of time. Now, that's kind of short. We don't really like that tiny of a move. This is about as small as we want it to be for me, and that's pretty small. And if you go back in time, and the market's just kind of snaking right now. It's a little bit quiet. But if we go back in time, let's turn off this auto scale. You can see we had some bigger moves in here as we got a little bit further, in the middle of the day. So this is back at 12 o'clock, 1 o'clock in the afternoon, my time. So I'm mountain time. So you can see that is a nice move. We'd have caught that one right there, right? Just go from that little green break to this little green break. That's $170 from this little green break to that little green break. That's $145. Here's another one right here. Just from here to here, that's $140. From here to here, the little ABC, $120. Here's another one right there, $65. So you can see you can get in and take advantage of some of these markets when the market's moving. Oh my goodness, look at this one here. Back here. This started at about 12:30 this afternoon, all the way up until it broke about right there. That was a $390 move. Now, that's the kind of markets that we like to trade when we're starting to get that kind of stuff, right? So we come in here. Here's another one. Just a little break from this green to this green here. That's $95. You can just pull this little bit of piece of money out of here. Now, it's not that easy. You have to be, here watching. You have to be ready to watch it. And so you can come in here and you can go like this and you say, oh, well, here's one right here, this little break right here. Now you say, well, why don't I just have the computer do this for me? Why don't I, every time it breaks across there, I'll just get in. Well, you can do that. And the software does that. It's over here. It's called the autopilot, but we're not really interested in that kind of trading right now. We don't want to have the autopilot do it for us. We want to do it ourselves. So I have it, what I call the semi-automatic trading, not the fully automatic, the semi-automatic. So I can decide when I want to get in and out. So here's another opportunity. Look at this. This one is a nice move. When the market starts to move, that's $225. Listen here. When the market starts to move, trading is easy. What's hard is to, figure out how to get through times where the market's not trading. You're going to get your little hiney handed to you a little bit right in here. So you have to have your winners have to pay for your losers. But once the market starts to move and it's making these nice trends, well, that's when you want to trade. When was this? This was at 12:04 p.m. So right after lunchtime, that thing's, look at that, right during lunch. That was a beautiful move. All right. So that's 12 o'clock my time. What time is that in Chicago where the exchanges are? Well, at 12 o'clock my time is, they're 1 hour ahead of me. So it'd be 1 o'clock their time. So they're just getting back from lunch. So just getting back from lunch there, and that's what they decided they wanted to make the markets do. Look at that big market move. Just this nice little move all the way down here. That was $295. We had a little counter trend. Another little $345 move. Those are beautiful moves in the market. Holy cow. Those are money makers right there. Now we're in the last hour of the day. So here, look at this. When did this one start? This was at 11:54. Look at that. Look at that beautiful move right there. You catch that little break from this green dot to that green dot all the way down to there. That's $435 with a single contract, $2,000 investment. You put $2,000 in right there. How long did that take? Well, that started up here at 11:54 and it ended down here at 11:57. That market was moving pretty fast. So you better have the computer help you make that trade, right? So we're going to show you how to do that. Look at this. There's all these little moves in here, all these little scalps. These are all scalps. All right. That's what we call them, scalps, because you're only in the market for a few minutes. Look at that. That's $215 with a $2,000 investment. And that started at 11:30 a.m. my time. So that's 12:30 back there in Chicago to 11:31. So that took, oh my goodness, market was moving fast. That thing right there moved in about 1 minute. We can slow it down. This is called a range bar 8. All right. So these are range bars. Now this is kind of my little secret code that I turn on in the software. And I'm going to show you how to set this up. I told you all this. Now, this is where you have to be careful. When the market starts to do this is where you kind of lose your hiney, all right? Because you just go back and forth, back and forth, back and forth. So you have to wait for the market to make a nice move first. Look at this whole thing was a really nasty point in the market right here. This was a nasty, nasty time. You don't want to trade through there. So if you had the autopilot turned on, it would just sit there and go back and forth, back and forth, back and forth. Might lose some money through there. So you want to be smart enough to be able to sit here and say, okay, I want to take these trades. I don't want to take these trades. And you have to recognize when the market has nice moves like this, but then you have to recognize, it died. So you have to figure out that too. And we oftentimes look at the news. Of course, we're going to come in here. Let's pop up the news, because we have news events that can also make this market move. And so you want to be mindful of the news, and I'll show you how I find the news. Oh, maybe there it is. So here we go. So this is my news event calendar right here. And this tells you when the market's going to move. All right. So this is called tradingeconomics.com/calendar. Now there's a lot of calendars out there on the web. You can go find one that you like, but in the meantime, use the one I like. It's right here. And I have it set to impact 3. You can do impact 2 because impact 2s move the market too. It's just impact 2s moving the most. So today's Wednesday at 8 a.m. we had ISM, the Services Purchasing Managers Index. And when that report came out, I can tell you the market moved. All right. And then JOLTS job openings, those numbers, when those numbers come out, the market goes a little crazy and starts to move. So you can just kind of watch this and trade around those events. But the problem is sometimes they move too fast and these markets get a little bit crazy. So, sometimes you want to avoid the news events, but it depends on which ones do what. Tomorrow we have some news events. These are all level 2s tomorrow. So there's not a red one in there. So you can see it 6:30, 6:36. That's all early morning stuff. Non-farm payroll, all that kind of stuff. Friday, we have 6:30. These are all earlies, non-farm payroll. 6:30, 6:30, 6:30. Now, this is 6:30 my time because you can see I'm UTC 7. So it's 6:30 my time, 7:30 Chicago, 8:30 in New York. And now remember, since we're trading the stock indexes, over in Chicago, they're going to be highly influenced by what's happening over in New York. All right. So New York is a very important time when we're trading the indexes in particular, because they're going to have their market opens, and that's going to make the markets move crazy for us too in Chicago. All right. So we wanted that. Well, our goal is just to try and capture these little moves like this, these little snaky moves. And sometimes, you get your little, there's a perfect little setup right there. See that? See how we get the nice little move? The market started to move. It's dead, 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 dead. We don't know when to trade. Suddenly it moves. We're like, oh, that's our opportunity. It gets a little pullback. There we go, from there to there. And that's just a nice little capture right in there. And you're like, man, that's tiny. Yeah, but it was an easy setup. See the setup? That's what we're looking for. And then it comes in here. And that little setup in there, just from this little green dot to this little green dot, that was $80. Heck, $80. I know you could probably make that in an hour working at your full-time job, but hey, you could do that in just a few minutes here if you can catch it. Now, if you're going to, if you miss and you screw up, well, you're going to lose a little bit. I'm going to show you how to do this. We're going to get trading here in just a second. But I wanted to show you what we're looking for throughout the day. So you're going to be a day trader. You got to be able to recognize when a market's dead. Time not to trade. That's the hardest thing of trading. The hardest part of trading is being able to identify when to trade, when not to trade. This is when not to trade. Don't trade this. Hindsight's easy, right? We're going to trade a little bit of it, and then we're going to realize, oh, I'm getting my butt handed to me. I better not trade for a little while. See if the market doesn't make a nice big run first, and then I'll start to trade again. All right. So wait until the market gets a little excited. So got a little excited there. You might have missed that one, and then think maybe it's going to do an ABC, but then it went this way. So you might have missed this whole thing. Then you got caught in there a little bit. I don't know. You don't know what you would have done, right? But you think, well, I would have caught that. Oh, I don't know if I would have caught that. I caught that one. Oh, I'd have caught that one. I wouldn't have caught that one. I don't know if I'd have caught that one. You can go back and look like that, and you can say, well, I don't know if I'd have caught that one. I don't know if I should be trading during this time frame. What time is this? This is 9:46 a.m. my time, 8:46 a.m. back. Oh, look at this. This is the market open. Okay, right here. This is 9:38 a.m. my time. That's 8:30 in Chicago, 7:30 in New York. So that means this is the open of the market. All right. So the opening bell right here in New York be 7:30, 9:30 my time, right? Or 7:30 my time. Oh, this is not the open. This is 9:30 my time. So this is after the 7. This is 2 hours after the market's already opened. All right. Market opens 7:30 my time. So we're going to, if we keep going back, but look at that beautiful trend right there. That is a nice little catch, right? Right. Just from there to there. If you'd have caught that, that'd have been $300. But Lan, I thought you were going to show me how to make $10 million in one day. Well, that's that other channel. Go over to that guy. I'm going to show you how to just trade these little scalps. My goal is $500 a day when I do this. So there's $270 right there with a single contract, $2,000 investment. You put two of them on there, that'd be $270 times two, right? $4,000 investment. You'd have made your $500 and you'd be done for the day. How long did that take? Well, that one, we're on a little small time frame. So it's on range bar 8. Market's a little slow, so I'm on range bar 8. If it's going too fast, you can slow it down by going to range bar 12. Now, what's a range bar? A range bar is a bar that doesn't have any time involved. We don't know how long it's going to take. It's just trend. It's 8, meaning 8 minimum moves. 8 pennies, basically. All right. So the 8 smallest incremental moves that it can make before it makes a new bar. So if it sits there for a whole bunch of time before it makes one bar could be 10 minutes or one bar could be 1 second. It just depends on how long it takes the price to move 8 minimum moves. So we can set how many minimum moves, and then it becomes a trend. All right. It's a trend bar. And so it's got flat bottoms. And so we love flat bottoms for an uptrend, and we love flat tops for a downtrend. That's what we're looking for. We love, once we start seeing flat bottoms, ooh, that's nice. It's beautiful. Okay. This stuff here, this is the hard part. Stay out. How do you know to stay out? Well, it's hard. It's hard to know to stay out. If it was easy, everybody'd be doing it. All right. But you can kind of figure it out. You wait until the market's actually moving first, and then you can start taking a couple of chances at seeing if it's going to continue moving. Okay. Let's see if we can get back here to the opening. This is 8:46. Look at all these little moves in here. This is all these little scalps you can make some money on if you can capture. I'm going to show you how. Oh, look at that. Beautiful little 3-drive pattern. Drive 1, drive 2, drive 3. Little pullbacks for red to green, red to green, red to green. Oh, that's just like classic. So beautiful. You might miss this one here because you're like, oh, this is tough. All right. Suddenly it starts to move. You catch that one. Up it goes. You catch another. Up it goes. You're done for the day. You know, there's a nice little move, $200. Another nice little move, $145. It's almost $500. You're done for the day. You don't have to trade anymore. $500 a day keeps the doctor away, right? Okay, so here we go. Oh, look at these nice moves. Ooh, you catch one of those, you're happy. Pays for a couple of losers, get you some money in the bank. Away you go. What time is that? That's still 8:30. We're still an hour after the market opens. We got to get back to 7:30. Oh my goodness, look at that big move. Ooh, let's scale this thing down a little bit. Okay, so how much would this one have been? I don't know. You might have got stopped out a couple. No, I think you'd have made it right across there. That one right there was $1,000. If you'd have caught that one right at the top, put your order in there and just have it trail down to the little green lights and get out when it crosses the green lights. That's all there is to it. I'm going to show you. Don't worry. Let's go see how this market started. We're at 8:30. Still an hour away from the open. We got to go to 7:30. Look at all these opportunities. Look at all these great little opportunities. Now, some of these I've squished it down again. So bring it up. Oh, look at all these. Now, the market might be moving a little fast. Again, we can change the time frame to maybe a range bar 12 to slow them down a little bit. But right now, we'll go see. Let's see. Oh, look at this. See, nasty. 8 o'clock. Nasty. Look at that. You trade through that, you're gonna lose money. So you gotta know when not to trade. You just wait for it to start to move, then you can trade. Now, this little indicator right here, it's called the DMI, directional moving average. We'll talk about that because that can kind of help you. If it's going up, it means the market's moving. See how it's going up like that? Doesn't mean the market's going up, because it can go up while the market's going down. This is just like a speedometer saying, hey, the market's moving fast, and then the market's slowing down. Then the market's moving fast, the market's slowing down. Doesn't mean it's going up fast. It could market moving fast and still be going down. So that's the way that indicator works. So you can say, oh, but look at that. Beautiful trade. Oh, wow, nice. Right? That'd have been a beautiful thing to catch. So you can see, and if you're wrong, you just get out really fast. And then when you catch one of these big ones, it pays for the loser. And then, of course, makes you a little bit of money. So you got to always be looking to pay for the losers so that you can catch them. No, look at that. See, the market's moving. Then it's moving, making a lot of money. Okay, see that? What we're looking for is the market to stay on one side of those green dots. That's $400 move right there. You catch that, you're rich beyond your wildest dreams. All right, let's go see if we can find 7:30 in here. We're still at 8 o'clock, 7:53. Let's come back here a little bit more. We got to get to the open 7:30 and see what it did the first hour. 7:43. Look at this. 7:40. It's going really fast. This is going to be in the morning when the market moves really fast. So you're going to have to be fast, or else you're going to have to slow it down by going to a large. Oh, look at that beautiful thing right there. When did that start? 7:30. Well, that's your market open right there. 7:32. Oh, we still haven't opened the market yet. 7:30 is going to be the market open. It's going for, there it is. 7:30. That's 8 seconds. 7:28. Market opened right here. That's your market open right there. Okay, so right out of the gate, the market went a little bit slow, didn't it? Kind of went sideways. And then it popped right there. Would you have caught that? I don't know if you would have not. You might not have, because you'd have been waiting. Oh, it's going pretty dead. Oh, it's going down. It's going down. Oh, pop back up. Now it's starting to go up. And maybe you'd have caught this one right here. Maybe you'd have got in right after that little red bar. I don't know. Maybe you said, okay, I'm going to take that one. And you caught that one from right here, from that red bar to the green bars, nice flat green all the way up to there. That would have been $225. And then it'd come down here. I don't know if you'd have caught this last little piece for another $90 or not. I don't know what you would have done. I don't know what I would have done. I have no idea, right? We have no idea what we would have done. All we can look and see is what we could have done. So from here to here, that's a nice little move, $60. Here's another nice little move, another $100 in here. Maybe we caught this one. I don't know. Maybe you didn't. $250. Maybe you lost here. Maybe you lost here. You lost here, but you caught that one and made all the money back. I don't know. Then you watch out. Then you make some more money here and you make some more money here. I don't know what you'd have done. Nobody knows what you'd have done. All you can say is what I could have done. What I could have done. I could have made some money in here if you'd have caught some of these and ignored the dead spots. You got to know how to ignore the dead spots. Okay. So let's find a nice strong. I see if I can find a nice strong downtrend. There. Okay. There's an example. That's what I was looking at. Okay. See that nice strong downtrend? Look at the indicator still going up. Okay, that means that's a strong downtrend because the indicator's going up. It's just a strength indicator. So it tells you when the market is strong. So if you want to use that as an indicator, the little DMI, directional moving average, in your software, you can. How do I turn that on? You just right click on the chart, slide down here to add indicator window, and it's just right in here. It's called the DMI. See, actually it's called, yeah, right there, DMI, directional moving average. So that's how you turn it on, turn it off. Now we've got it turned on, so I'm going to come over here. I'm going to show you my settings. Now, it's the DMI is part of the ADX. All right, it's also got the ADX, which has a crossover of DMI plus DMI. It gives you arrows and all that kind of stuff. I don't like all that stuff. The only thing I want is the DMI. So I have my DMI set to 14, and DMI plus, I can't turn it off. I don't have switches in here to turn them off. I wish I did, but I don't. So what I do is I turn them black. And the reason I turn them black is because the background's black. So you can see them in there. There are little black lines in there, but I just ignore them. That's why I turn them black. And then I use relative scaling. And I have a threshold of 20. And I like to put 25 because in there, 20, 25, somewhere in that range. As long as it's above 20, above 25 is kind of an extra threshold. As long as it's above 20 and it's rising, that means to me the market's strong. Now, if it's above 20 and it's rising, and I look up in the red bars, well, that means it's a strong downtrend. That's how you read that, all right? Use trend strength. So that's what we're doing. We're using the trend strength, and that's all we're really interested in. We don't care about the DM plus, the DMI minus. You might care about those, but I don't. So you can take a picture of the settings. DMI again, just take your little camera phone out. You guys have one of these little things, and take a picture of the way I've got my settings right there, and set yours like mine, and then you can see the way I see it. I'll give you a second to do that. I'm sure you already all did, but nonetheless, I'll let you give it just a minute so you can see how that's done. All right, so you're going to set your settings like that. That's your DMI. It's just a strength indicator. Again, it just shows you, and it lags a little bit. All right, market might start moving, and it's got to move a little bit to pull it up out of that zone down in there below 20, the threshold. All right, so you have to be mindful of that. It's not going to be a trigger that shows you, hey, it's breaking out right now. You're going to watch the chart for that. All right. But now let's go back to the end of the chart. Now I'm going to go all the way back to the current market chart. There it is. That's what the market's currently doing. All right. I got my auto scale turned off. This is how the market's moving around. It's dropping a little bit. So we're going to use a tool right in here. I'm going to come into the trading tab in track and trade. And I've set mine up. And what I've done with a couple of guys in the past is really simplify this. We're going to keep it simple. So I'm going to get rid of my bottom 2 3s and 4s. I'm just going to go minus, minus. And we're just going to use these two. All right. So I'm going to get your little phone out. All right. And I'm going to come in here and I'm going to show you how this scalper number 1's doing. We're going to grab that one. That's the settings. So you're going to go into your trading tab. You're going to right click on QCO1 and you're going to say add new QCO preference, or you can modify one. If you want to modify one that's in the list, you can modify, or you can add a new one. So I'm going to right click in there and I'm going to modify number 1. So I'm going to click on that. And that's the settings. Take your little iPhone, go in there, your little Google phone, whatever phone you have, go in there and take a picture. All right. Take a picture of those settings so you can set yours up like mine. Snap, snap, snap. So snap your picture. I'll give you a second to snap that picture. We're just going to use the first 2 buttons. Maybe next time we'll do the buttons 3 and 4 so you can get a little bit of an idea how they work. But we're going to take those. You got your snap in there. Now you're going to go set that up. All right. Now we're going to do the same thing on the number 2. So we're going to come in here, and mine is labeled number 3. So it's number 1, number 3, even though it's on button number 2. It's strategy number 3. You can see it in the list how I've got them all numbered. That's how I keep them separate, and I know which one I'm looking at. So this is strategy number 3, and it's on button number 2. So I'm going to come into strategy number 3 on button number 2. And it's assigned to button number 2. So now we're going to come in here, take your little camera, take a picture. I'll give you a second to do that. Make sure you take a picture. This is your cell. All right. And you'll notice that we've got this in here. This is called OCOs. All right. One cancels other. So what it's going to do is it's going to put 3 orders on the screen. It's going to get us into the market. It's going to put a stop order, and it's going to put a limit order to take the profits. All right. Now the limit order is only set at 10. So I'll show you how we do this. All right. I'm going to show you a little trick that you can use on this. So it's not confusing. And then we're going to this is the sell market side. So we're going to put a stop, but the stop is going to immediately jump to the ATR stop, which is that little green dot. And so the whole name of the game is really keep it simple, keep it simple, keep it simple. All right. Kiss, kiss, kiss. Now what we're going to do is we're going to decide when we think the market's going to rise or fall. Now we can turn on the arrows on here. We're going to trade the ATR. It's called the ATR, average true range. I'm going to set it to 1. And right now I got it set to 6 because the market's moving pretty good. Now this is the number that's going to be controlled. This is your biggest number right here. You're going to control this up and down. So this is 6, and we can go to 7, 8, 9. See how tight it makes those dots? Too tight. One's right on top of them. So we can make those dots as tight as we want, or we can loosen them up. See how loose we can make them? We can make them go really loose, long ways away from the market. See that? That's way too loose, obviously. We don't want them that far away from the market. We want them close. We want them close, but not too close. All right. So when a market starts to trend, we want them nice and close. I like 5 or 6. 6 usually is a good one. 5 sometimes, if the market's really strong, we can use 5. That's a good place. You can see how the dots are just right there, close behind the little flat bottoms and the flat tops. And our stop order is going to trail on that little black dot. Now, a stop order, of course, is in order to get you out if you're wrong. So the closer you can get that, the less you're going to lose. But of course, you can also get false breakouts where it comes down, stops you out, and continues going. So if you get it too tight, well, you get stopped out, and then the market, continues to go without you. Now, what we can do is we're going to use that, and we're also going to use Fibonacci. Now, most people see this as a traditional range bar chart. And then most people oftentimes don't even use range bar charts. They might use something like a 1-minute chart. Now, we're not using 1-minute charts here. I've got 1-minute charts, and you can see them in here. This is a 1-minute chart, and I'm going to turn off Fibonacci. And that's what most people look at, all right? That's kind of what most people trade off of. That's really hard to trade. I can't trade that. I can't make money on that. Can you make money on that? How the hell are you going to make money trading that dumb chart? So I use cheat codes. I cheat. All right. If you can cheat in these markets without being illegal, don't cheat that way. All right. So we're going to come in here and turn on the cheat codes. For me, the cheat codes are Fibonacci. All right. There's one cheat code. Look, that makes it a little easier to see. I like that. That's nice. That's a little Fibonacci. Now, to get Fibonacci on your charts, if you're using track and trade, you want to come in here and you want to right click on your bar, custom toolbars, come up here, and you can customize whatever's on that toolbar. So it's going to be in the left window, and all you're going to do is you're going to come down and find it. Now, I've already moved it over, and then you hit add, and it puts it over there, and then it puts it up here. Okay, then you hit close, and then you can hit Fibonacci. You can turn that on and off just like that. Pretty cool, right? Okay, so there's Fibonacci. Now, I like Fibonacci, and that's a Fibonacci 1-minute chart, but I like range bar charts better. So I come down, I go to a range bar chart. That's a range bar chart. Now, again, range bar chart doesn't have any time involved. It's just trend alone. But if we turn on Fibonacci on a range bar chart, ooh, that's what I call the cheat codes. All right. Boom. Just look at that. Look at that. That makes it so much nicer, so much easier, so much better. Now we can trade that thing. Now we turn on the ATR. I like the ATR, average true range. I set the period to 1. I set the stop factor to 0.06. And then I come in here to my trading tab, and I have my QOCO1 set up, and I have my QOCO2 set up. So now you have my whole setup. Now all I have to do is wait for the market to look like it's going to continue to rally in the direction of the dots or against the dots. So we got the dots along the bottom side. That's where our stop's going to be. So we want to get in on that trend. We have to wait till the market starts to trend. Let's say we think the market's going to start to go up from here. We'd hit the QOCO1, which is our scalp market buy. If we think the market's going to go down from here, we could do a scalp market. It would be this one, number 3. I should probably rename that 2, but it's 3. Scalp market sell. Have I got another 2 in here? I do. It's trail market. I should name that one 3, and this one should be 2. Why don't we do that? I'll show you how to do it, just so you can know how to edit things. So we're going to come in here. We're going to change this. We're going to change that number. I'm going to just come in here just like this. And I'm going to make that a 2. All right. So that's our sell market 2. And then we're going to come in here to our 2 now, which is the trail. And I'm going to make that 3 just to keep it from being confusing. All right. So that's 3. Now, we're not going to use 3. We're going, oh my goodness, look at that. We were sitting there playing and that market took off. How much money would we have made if we'd have put our order in there? We'd be up $275 right now. Oh my gosh, I feel bad. Okay, well, let's see if it doesn't give us a little ABC pattern. Maybe or it might just turn around and go right back up. Sometimes the market just likes to snake. It goes up and down and up and down. And notice that markets always make one up for every down. The problem is we don't know how big the up and how big the down is. Oh my gosh, I'm feeling really bad. This is called FOMO, fear of missing out. Oh my gosh, look at that. So we got one up. We got a little down here, one up. We got a big down here, a little up here. And now what's it going to do? Notice there's one up for every down. We just don't know how big the ups and downs are going to be. There's one green, one red, one green, one red, one green, one red. All right. So what we're trying to do is we're trying to catch these big long moves like that. That's what we really want to do. And we're going to use these little automated buttons. So now that we've got this all set up, all we have to do is Wait for that little green dot. There it is, and we can go. Oh, it's going to come back and stop us out. Maybe, I don't know. Market doesn't look like it's moving anymore. Decided to stop going. So we got stopped out. We lost 40 bucks. All right. So now what we're going to do, wait for the dot to flip. That's on the top side right now. If we think it's going to continue down, we'd want to hit the sell. Yeah, it's going down. Let's try it again. Jump by it. Oh, and it just turned around and went right back up immediately. And the market's dead. We should really sit on our hands right here and wait for it to start to move again. Problem is, you wait for it to start to move, and it does one of those big long things, you miss it. Okay, so the dot flipped to the bottom side. That means we could go buy. Let's wait and see if it wants to go. There we go. Okay, we're going to get in there. Now I'm going to put in a second one, and I have 2 limit orders. One's for profit taking. Oh, it's backed off and hit us again. Now we're down $200 already. It's because I went in with 2. We're going to try again. Let's see if we can just scalp a little bit off. There we go. Okay, we made a little bit of money. Let's close down. So we just made 50 bucks on that one. I could have done 2, and then I'd stay in the market longer. I thought this would rebound. So that's what you're doing. Now you're just going to practice. Practice. This is the demo account. So you just practice, learn how things work. And then the name of the game is just to be able to, figure out when the market's going to move, when it's not. And you got to take your risk. Now I grab my little limit order and put that out there. So I got 2 contracts in. I need the market to move in my favor. Don't turn around and go back up. Come on, keep dropping. Oh, it stopped me out. Now, see, I had my little blue dot, a little bit green dot, a little bit too close. If we want to pull that back a little bit, we can go to 7 in here. That wouldn't have stopped me out. The market's kind of died right there again. Look at what's happening to our little DMI. Our little DMI is headed down. That means weak market. It needs to turn and start to go back up, show strong market. Okay, we're going to try again here. Okay, I'm going to grab that little. So I put 2 of them in. So I have 2 limit orders. And I dragged that 1 limit order away. So it got the first one. We made another 50 bucks. Now we're just going to trail down with the last contract, see how far it'll go. See if we can't catch a big long one. And if it comes all the way down here, it'll make $325. Now we're down $215. So to just get us back to green, we can bring this up. We'll just bring this up if I can grab it. Come on. 215. It's being a little slow for me. I got too much stuff going on. 215. Oh, it stopped me out. Stopped me out with $105. So that's $150. Now we're only down 110. Now we got to recover 110. So it looks like it's going to go. If it switches, I'm going to switch to the upside. That little green dot will flip over. There we go. Okay. Now, see if we can get another one in there. Oh, we got 2. So we made $100 there. So now we're only $30 down. Okay. Now let's try it again. What's it going to do? What's it going to do? What's the little snaky thing going to do? That's all we're really trying to figure out. See if it'll go up. No, that doesn't look like it wants to go up. Just go up a little bit, 50 bucks. Is it going to go up stronger? Maybe. No, got $5 out of that one. Now remember, you have to pay your commissions and fees on this. Oh, there it goes. Let's see if we can't jump in. Oh, I don't want it to go. It wanted to go. This is a false breakout. They fooled us. Yeah, fooled us. Now we're back down $130 again. All right, so we just have to wait. Come on, baby. Come on, baby. What you going to do? It's kind of dead. We should really kind of sit here and wait for it to start to move again. But that's no fun. Not when we only have 20 minutes till the market closes and you guys are watching to see how things work. And look at the DMI. It's way down below 20. We shouldn't be trading right now because all the signals say don't trade. We have to wait and see if we can't wait for it to start to move. But we're going to do it anyway. We're going to trade anyway because we're getting a little bicycle. It's just not a good one. Oh, we lost some more. 190. So see when the little green dot flips, okay, that's a downtrend. Okay, we'll take that one. Oh man, I clicked off the button. Oh, well, it's a good thing I clicked off and didn't do it because now it's going up. But I missed that one too. Oh shit. That one could have got all of our money back. It got us back out of the hole. It's moving though. So now it's moving again. So now we can. Are you guys trading along with me? Are you doing this too on yours? Let's see if we can't. Oh my goodness, look at it go. There's a little pennant formation right there. See that little drop right there? Some aggressive guys would have taken that. Okay, it's going to pull back here. Let's not take this because it's an uptrend. So let's see if it'll pull back a little bit. Give us another flip to the upside. Let's see if it'll do one more up. We don't know. It might just come back down, but if it'll turn and go back up, that's what we want to see. We want to see it go back up again. Break across those green dots. Oh, look at it come down. Why didn't you take the short land? Well, because I think I'm going to look for that little ABC pattern in here. Come on. Ooh, it's going down. It's going down. It's going down. Oh, no. Okay, here we go. Come on. Start back up again. I'll hover my mouse over my QC01 so that if it goes back up, all it's got to do is got to cross those green dots. Let's get above those green dots. There's a couple greens. Now, it could just give you a couple greens and go red again. So be careful because it isn't it. But see, if it does that, I guess we can take another short. We can try it. Come in here. Let's see if it wants to go short. It's going to just die right there. Oh my gosh. Died. Didn't go down. We'll try one more small one right here. Nope, doesn't like it. Going to go up. We're going to try one right there. Okay, we're going to grab our little blue line, our limit order. So we got an OCO stop, we got an entry, and we got an OCO limit. I got two of them on here, so I can take one off at $55, and let's see where are we at? $200. So I'm going to put this at $200 just to get us back to break even if it'll go up that high. Come on, don't die on me again. Come on, buddy. Come on, this is where you start stabbing your little steely knife under this guy. Come on, go up, go up, go up, go up, go up, go up, go up. Come on, break up there, break up, break higher. Now we're only in with one contract, so let's go way up there. If we had two, it'd only have to go half that high. We could add one on right here if we think it's going to continue higher. A little pullback. Got a little dollar cost average thing going on. Oh, it took one off. Did it take one off? It did. Now keep going a little bit. That gave us $100 right there. Keep going a little farther. We only need 92. Come on, buddy. Get us back to break even. Then we can start from a position of strength instead of weakness. Oh, well, that got us back a little bit. Got us 107, 150, 50s, almost 160 bucks, and we lost 20. So it got us up 150. Now we're going from red to green. We'll try one more little small one here. Let's just see if it'll pop up one more time. Come on, you going to go? You got to get out of the hole here. Come on. We are way over trading, but we're in education mode. So we're still learning here. We got to learn. You got to practice. Okay. All right, here we go. Let's see if it's going to go down or if it's just going to die and go sideways on us. Come on, buddy. Oh. Now there's a micro mini. This is a mini, and there's a micro mini, and there's also other markets that are smaller than this. So you're not risking quite so much on each trade. Notice in here, we're risking about $50 on each trade. Okay, you can go to where there's like $5 on each trade instead of 50. So you're not risking nearly as much, but you got commissions you got to pay out of these things too. So remember, commissions are much less relevant in a bigger market. Market doesn't have to move very far to cover your commissions. In a smaller market, has to move a long ways just to cover your commissions. Keep that in mind. This is not commission-free trading. Futures market is not commission-free trading. It's got tighter spreads. If you go to a commission-free trading, well, the spreads are wider. So it's really commission anyway. You just don't see it as well. I don't know if we're going to get anything out of this thing. I just put one in there accidentally. Okay, come on. Let's just sit on our hands for a minute. This is no good. Oh, come on, you dead little market. All right, we got some comments in here. Let's go see what people are saying. Kirk's saying, hey, good afternoon. I'm still learning between the 2-minute chart versus the range bar chart. ES14 range chart, NQ24 chart. What is your favorite? My favorite is 8 and 12, Kirk. So you're saying you like the NQ24? That moves a little slower. If the market's really moving fast, you can get up into those numbers. I also use the Heiken-Ashi candles to help me make decisions. Yep, SOH. Sit on hands is also a good position. Yes. Oh, look, we're missing it right now. I'm over here chatting. Let's see if we can get something going here. Let's pull this down, see if we can't get something going. Come on, baby. So, well, good. I'm glad you're enjoying it, having fun anyway. You get good at it, and the markets are really moving, not like they are right now, just kind of dead. Then you can make some money at this. I came in yesterday and was sitting there, didn't trade for like 20 minutes. I sat there and watched the market start to move. I put a couple orders in, $500, just like that. That's how I like to do it. I just like to have that little screen sitting over there off the screen. I'm doing something over here. And when the market starts to move, well, there's a nice setup. Bang, pop it in there, make a couple $100. Do it again, make a couple hundred more, and you're done for the day. That's it. Then close. The hard part's closing the window when you're ahead. All right, here we go. Let's give it another shot. All right. Okay, one more. Oh, don't die on us. What are you doing, you dumb nincompoop market? What are you dying for? Why don't you just keep that little trend going? Come on. Keep her up there. You need a little Viagra? Come on. I'll give you a little Viagra. Here's a little Viagra. This is green. Ooh, I don't have a blue one. Come on. Get in there. Pop up there. Come on. Come on. Come on, buddy. All you can do is cheer at this point. You're a cheerleader. Come on. Come on. Oh, you rotten little booger. Well, we had 3 little winners there, and then we lost 2. So look at this. This is how dead this is. This is not a good market. Not a good market right now. Everybody's gone home. The power hour is not very power. This is just more like hour. Hour without the power. No power in this hour. Come on, what are we going to do? What are we going to do? What are you going to do? Which side of the market you going to stay on? Just going right back and forth across the green dots, not doing anything. Sit on hands, Kirk. Sit on hands. We got a bunch of people in here watching. Kirk's the only one speaking up, though. You guys can all say something if you want to, even if it's just, man, you suck at this. You can say what you want. Say what you want. Come on, buddy. Come on, one more. No, don't go back now. I just put a second one on. What a dead market. It was very disappointing. Well, look at our DMI. The DMI is way below the 25 threshold. We shouldn't even be trading. See that? See the DMI, if it's below the 25 threshold, this market is just dead. Dead. We shouldn't be trading. Don't trade unless it's above the 25. That's a strong market. And rising, that's the one we want to be in. If it's above the 25, it starts to fall. It's weak market. All right, come on, let's try again. A couple of easy ones. Come on, give us an easy one. Come on, you little stinker. Wow, DMI is way low. Way down there in the bottom barrel. We ain't getting no strength out of this market. Oh, you rotten little bugger. Did it again on us. So, that's a good little indicator. It tells you when not to trade. Just don't trade when it's below the red line. But we're going to do it anyway because, hey, we're in a demo account and we're practicing and trying to learn. Well, that made a $50 in that market. Oh, that was the 10-minute bell. That stupid 10-minute bell. That thing. You got to never be in the market during the 10-minute bell. Uh-oh. Well, that made $50. We're just getting our heinies handed to us. We're way over trading, guys, but we're having fun. All right, we're having fun. We're learning. We're learning what not to do today. This is a dead market. Sit on our hands is what we should be doing, but I can't because it's too much fun to sit here and play with you guys. We can't catch it. We got to catch a trend. We got to catch a nice big move. We're just getting our butt handed to us right now. Dead market. Dead market. 10 minutes till the bell closes. I can't catch a single thing. Come on. It's like fishing, man. All we're catching is guppies. Just taking all our bait. Well, that got us a little bit. Try another one. Drag this one out a little. Come on. Come on. Come on, market. Put one on right there. That's not a very good place to be putting it on. It's already moved. Told you. Come on. Oh my gosh, we're not going to get any trend out of this thing in the last 10 minutes. Think people are going to be getting in and out of the market right now? Probably not. Maybe they'll be getting out, trying to get out before the market closes if they were long during the day. Who knows? Nobody knows. Look how dead the DMI is. I guess if we learned anything today, it's the DMI. The DMI, pretty good little indicator down there. It's telling us not to trade through this whole thing. It's below that red line right there. I'll show you the DMI settings once more. I got 20 and 25. All right. So 20 is kind of like, okay, we're starting to get excited. 25 is kind of like, if it's below that, I don't know if I want to take the trade. It's got to be above 25 to start taking the trades. All right. So at least we learned a little indicator right here that we can use to try and help us know when the markets are dead. And you can tell right now markets are dead. Here, let's make these things a little brighter for you. Dead. See that? Okay, save as my update. Update all of the MIs. Don't trade if that little blue line is underneath the green line. And start thinking about it when it rises above that. There's nothing here. It's still there. It's not moved. So should you take it? No. Let's take it anyway. Just why land? Well, it might break out. Who knows? Who knows? Nobody knows. But it's dead. It's way down here below the green line, and that means that you shouldn't be trading. All right. So if we learned anything today, we learned about the DMI indicator, and we learned that power hour oftentimes comes with no power. It's powerless hour. Powerless hour. I don't like to trade real money in power hour. That's why I have these classes in power hour, because I'm not going to be trading it with real money. I'm not a real big power hour fan. That's why we only do it with fake money. Come on, powerless hour. Give me something. Give me something. This thing's completely dead. Oh, damn, this was real money. Just kidding. Come on. I'm sorry, guys. We're not really learning anything here. Let's go try and learn something else. We can go look at another market. We can come in and go to the, let's come down here, and in the mini indexes, we can come down and we can look at the Dow. So let's look at the Dow mini. We'll open up the Dow, and we'll come down. We'll do the same thing. We'll just do a range bar 8. We could do a range bar 6, which is even a little, oh my gosh, look at that thing. Where were we when that happened? Look, we'd have given it all back right there. Let's come down to range bar 6. This is even smaller. Turn on Heikin-Ashi. Ooh, that's got hairy tops and hairy bottoms. We don't like hairy bottoms. And we don't like hairy tops either. But we really don't like hairy bottoms. All right? Look at all the hair on those things. Hairy bottoms, not a good thing if you're in an uptrend, and hairy tops is not a good thing if you're in a downtrend. You don't like hair. If you got lots of hair, hair on one side's okay. Just not if it's in a green bars, no hairy bottoms. Red bars, no hairy tops. right? That's a range bar 6, so it's even slower. All right, even faster. Let's go to range bar 12. This is the Dow. Oh my gosh. Look at that. That's not so bad. We have to tighten up our ATR. Bring our ATR to 6, maybe. Maybe 7. That's a nice move. That's not so bad. We got too much on the, let's come in here and fix our chart preferences. We'll come in here and we'll adjust this. I think we want this up here around 25. That looks good right there, 25. Okay, trade. We're going to be able to trade that. That's a little drop in there. Let's put one in and see what happens. Okay, we got our stop up there. It's waiting for the green light to flip so it can start to trail in the green light. Let's put a second one in there. And we're going to drag this down a little bit like that. So now we got 2 of them in there. We got a limit here to take profits at this point, limit here. And you notice that this is a smaller market. Even though we're on range bar 12, it's just a smaller market. It doesn't make and lose as much money. Still a mini. It's not a micro mini. It's moving pretty slow. See, we slowed it down and went to range bar 12. So if you go out and you're trading in the morning, market's like going crazy on those range bar 8s, man. I can't even see it. It's going too fast. We'll go out to a range bar 12 or do what Kirk says, go out to a range bar 25 or something. So you slow the market down. But we got in now. We're going to look at the loss we're going to have on that thing if it goes back. We got 2 of them in there. Did that green dot switch? I don't know if the green dot switched yet. It didn't. We didn't wait for the green dot to switch. I put it in a little early thinking it was going to continue down, but now it's starting to go back up. We're going to get stopped out with a bigger loss. Here it comes. Now you're taking bigger risks when you go up to a higher number. Range bar 12, range bar 25, your stop's going to be further back, dollar-wise. Oh, that's disappointing. Let's come to ATR. Let's make that a little brighter so you can see it. Starting to go up. Okay, well, let's try it. Let's throw it in there. Oh, I haven't got a green dot yet. It didn't flip to the other side. Oh, it took a little early. No green dot on the bottom side yet. We've only got 1 contract. This market's dead. Come on, buddy. This was beautiful back here. When did that start? That was at 123. That whole big long drop. How much was it? From this dot to that exit dot that's $595 for a single contract. And we've been doing 2s and 3s. So we might have made over $500 to get some of our losses back. Oh, look how pretty that was. We were on the wrong market today, weren't we? Range bar 12 is not bad, but it's a little bit bigger, so you have to take a bigger risk. This is dead. Come on. We're not going to get any rally. We're 2 minutes before the market closes. Now, the market's going to close in New York. In Chicago, it doesn't close. There it goes. Now it's making a little move. Oh, that was good. How much we make? $50. Okay, let's pop another one in there just to see if it'll continue to give us another little rally right here before the close. Get 3 of them. We can get our 3 little target points out there. And then the trailing stop, we have 3 stops in there, but they're all at the same location. So it'll trail out on the 3 stops. See that all on the green dot? But each one will take a profit off here, take a profit off there, take a profit off there. If you don't want one to take a profit, put it way out there. And then it'll just trail the green dot until it crosses. You can do that too. The whole name of the game, once you get this all set up, the whole name of the game is just knowing when to trade, when to pull that trigger. Is the market moving? Is it going to trend? The hardest part is not knowing whether it's going to move or not. And that little DMI indicator is about as good as it gets to help you know when the markets are moving and being trending. See, this is coming down. Well, there's our indicator, market's closed. So see, it's coming down. So that means the market's weakening. It's going up. See how it's, even in a red downtrend, it's going up. That means a strong market. Now it's coming down. It means a weak market. Okay, strong market. See how it starts to get weak right in here? Weak market, strong market. So if you set, I'm going to give you one more time. I'll give you that DMI settings. I like that little indicator. When you're day trading, that's a good one because if it falls down below those red and green lines, stay out. And when it's climbing, that's when you want to be in. When this thing's going up, so when it comes here, this is your opportunity to find a reversal. And what? And remember, it's not direction, it's strength. Okay, strength. Even though it says directional movement indicator, it's kind of a dumb name. It should be a strength movement. It should be an SMI, not a DMI, because it's not got anything to do with direction. Now, the reason it's direction is because I've turned off the directional. DM plus and DM minus are supposed to tell you the direction, but I don't like them. So I don't use them. So I just use the strength alone. All I am doing is DMI. This is just the strength. Okay. And you can make it a little bit more aggressive. You can come in here and turn it down a little bit, right? That like that, or you can turn it up, make it a little less aggressive. All right. So you can turn it up. But I just like 14. That's the defaults. Just leave it on 14. And that's kind of a nice setting right there. But markets are closed. That's all we got to it. That's all we got. That's my lesson for the day. So now all you guys have to do is practice, practice, practice. And you can make some slight adjustments to it, however you feel like you want to do it. But that's all I got. Kirk says, New Year, do you have an opinion on New Year movement? I have a trade miner as well, but haven't run a future scan yet. My bad. We need to go look at that. You know what? Maybe that's a good idea, Kirk. Why don't we, today is Wednesday, tomorrow's Thursday. We got one more class this week. So tomorrow, how about we do seasonals? We can run both. We can do the stock market version and we can do the futures market version, and we'll do seasonals tomorrow. We'll look at the seasonal trend. That's a good idea. I like that idea. So how about that? Does that sound good, Kirk? All right, guys. Tomorrow morning at 9 o'clock a.m. Mountain Standard Time, 8 o'clock Central, 7. It's the other way around. Yeah, no, that's the other way around. So 9 o'clock Mountain, 10 o'clock Central, 11 o'clock New York. All right, Eastern. So 9 o'clock our time here in Utah, and that's Mountain Standard Time. Mountain Daylight Time. Are we on Standard Time or Daylight Time? I don't ever know. So I just ignore them. Just say tomorrow at 9 o'clock. All right. Mountain Time. And then we will see you guys tomorrow, and we'll do it again. Only we're going to do seasonals tomorrow. Good idea. All right. And you've already seen the software. I think I'll put this one up one more time for you.
Okay, this is the software I use. It's called Track and Trade. They've got two versions, one for stocks, one for futures. This is the website, trade.com. This is where you download a free 2-week trial. No credit card required. Okay, go download your copy, then come back here, follow along, and I'll show you all my settings.
All right, guys, we'll catch you tomorrow morning at 9 o'clock. Have a good evening.
All right, that wraps it up for today. If you got something out of this, do me a favor. Like the video, subscribe to the channel, and share it with someone else who's trading or learning.
Hey, don't forget to tell them to subscribe to Pitt News Magazine.
Oh yeah, definitely subscribe to Pitt News Magazine. You'll thank us later.